Hey, imagine having access to $20,000 in cash, no credit check, no bank loan, and no penalty for using your own money. That sounds too good to be true, doesn't it?
Right. So most Americans only use their life insurance when they die, yet the wealthiest families use it every day while they're alive.
So if you don't understand how whole cash value works, you can be missing out on a whole lot of money. A
Right,
safe, tax advantage way to build wealth while you're still here to enjoy it, while you're still living. So just
right,
imagine that. And even if you're counting on retirement for state government employees, kind of like how we are,
right.
this strategy can help give you flexibility right now, so you can enjoy it not just in retirement.
Absolutely. So in this video, you're going to learn how the cash value in a whole life insurance policy actually grows over time and why it's different from other types of savings.
Yeah, you'll also learn how you can access that money while you're still alive. So while you're still living, doing your thing, you're still enjoying the benefits without penalties, bank approvals, complicated loan processes. You know how it is going through underwriting. That's a big headache. So
Right.
really, just smart ways for people to use their own cash value. From paying off debt, that could be one benefit, to funding college. If you got little rugrats running around, you got to find a way to take care of them. And even just buying real estate, trying to build your portfolio. When they think about life insurance, they think about it like it's a locked drawer that is tucked away. You got to just keep paying premiums month after month and hope that it's there for their family someday once they pass away.
And then too, and you guys, that you'll be able to use this like even like in the near future. And even when we think about like gift cards, how many of us have had gift cards, you didn't use them, you forgot where they were, things like that. Because you didn't even realize that it was sitting somewhere. So same thing with like the cash in our policies. That you want to realize that inside that drawer is a gift card and a gift card with thousands of dollars that you've already paid for, but you never used.
Yeah, so really that's cash value. It's money you can use while you're still alive. You can pay off debts. So you get tired of those loan sharks. Hopefully you don't have any loan
Right.
sharks. Once you get with us, KLA, you don't have any loan sharks. But you pay off that debt, whatever it is. You can start a business to help build your legacy. You can cover even emergencies as they pop up because we know how that is. But only if you know where it is and how to unlock it, and that's it.
Right. So, what is whole life insurance and what makes it different? So, whole life gives you two guarantees, a death benefit and a cash value.
Yeah, and see the thing is the premiums stay the same with it. So you're paying the same payment. And the savings component, it continues to build up steadily over time.
Right. So, what is cash value and how does it actually grow? Well, every time you pay your premium, it goes three places. Some covers are insurance, and some covers admin costs, and the rest goes into cash value. So, let me say this too. That's kind of why it's going to be more expensive than a term policy because of those three buckets.
Yeah, and that cash value, it grows tax deferred. So with a guaranteed rate, so that guaranteed rate usually is what, 3 to 4% or so.
Right.
And many policies, they also pay a dividend as well. So
Right.
it starts off small, but anyone that knows, and even in my classroom, I teach exponential functions.
Hmm.
That's compound interest. So
Right.
it compounds steadily over time.
Right. So how can you access the cash value while you're alive?
So, I mean, with that, there's three main options. One is you can take out a loan. There's no
Hmm.
credit check involved with that,
Hmm.
right? So it's like you're your own bank in that case.
Right.
Another way is there's no taxes, and then you pay it back on your own terms. You don't have to worry about, because y'all know how those monthly payments are. It seems like as soon as you pay one, another one's right knocking right on the door for you. But you set things on your own terms.
Right. If you take more than you pay, though, it is tax, and your death benefit will go down.
So yeah, and let me just kind of butt in,
Mhm.
like with that. And part of one of the things we do on our channel is we discuss building your business credit, and part of building your
Right.
business credit is understanding personal credit and understanding that when we say there's no credit check, even if you have stellar credit, let's say if you have an 850 credit score on the personal side, every time there's a credit check, that's an inquiry that's impacting your credit, which decreases your score. So I just wanted to mention that as well. So.
Absolutely. And then there's another way that sometimes you'll see on commercials and things of that nature where people are surrendering their policy. So that's an option. We don't really want most people to do that. That ends the coverage, but it does give you the full value.
Yeah, it does. But just remember one thing though: any loan that you don't repay, it will, if you take it out against your own policy, it's going to reduce that death benefit.
So real life uses for cash value that you may actually care about. So people use their cash value for all kind of things, but some of the big things are going to be college tuition. Like we said earlier, you have little kids now, but the goal is for them to go through high school, and have a desire to, learn more to further their education. You might need money to do that, whether it's college or a trade school. You can use your cash value to do that. Paying off high interest credit cards, because we talk about financial success and trying to clean up our finances. It's important to pay off those higher interest credit cards. And then, of course, sometimes emergencies that come up or home repairs. You can use your money for anything. When you call them, they don't ask you about what you're going to use it for. You just ask for the money and they cut you the check. You use it for whatever you need when it comes to these loans.
Yeah, starting a side business. So if you ever had dreams, and you know how a lot of us do, the thing that we hate the most, especially I'm talking to entrepreneurs, is you have this great idea, but you never put it on paper. You never put it into action. And then 5 years later, you see it on some commercial, and you look like you're hitting yourself upside the head, like, dang, I should have
Right,
went ahead.
right.
So yeah, you get a job, you get a chance to invest into a business with that. So really, you're creating a safety net during the job change or early retirement as well. That's another option away from starting your own business.
Right,
So
because it's flexible money. Now use it wisely, but know that you have options.
yeah, so why is it so powerful for individuals, families, and even educators like us to enact these things? When you think about whole life, it gives you predictable savings.
Right.
So that's really a peace of mind.
Absolutely. And it gives you access to funds when you need them. That's financial flexibility.
It builds generational wealth. And because this channel is not just about the finances, it's about kingdom life,
Right.
which really speaks from a Christian standpoint. We understand that the word tells us that a man leaves an inheritance for his children's children. So to me, that generational wealth component is a big aspect. It helps keep your legacy secure.
Absolutely. So for individuals, for families, for educators, this kind of stability means everything. Legacy, control, and contribution are all wrapped into one.
Yeah, that's phenomenal. When you think about that.
Right.
So, and even if you got your retirement benefits from state and government employees, this adds another layer of protection and purpose as well.
All right, you guys, I'm gonna give you like a bonus segment, a little case breakdown. So let's break this down. If a woman in her 40s has been paying 3,000 a year into her whole life policy, after 10 years, that's about 30,000 in total.
So yeah, at this point now she's got maybe 20 grand, right, in cash
Mm-hmm.
value available,
Right.
just from doing that consistently. Plus her death benefit is full and is active as well.
Right. And she can use that money for college tuition, upgrading her home, or covering a big medical expense. And I want to say this too. I know some people may be saying, oh, I could just save that money to the side. Just do the research. Most Americans don't even have $1,000 in their savings account. So this is a safe way to really build that safety, like that savings nest egg that you may want to do and be able to pull it out where you know it'll be there.
Yeah, now that based on what this small conversation, and of course we'll have more content in the future that breaks down some other ways that we can benefit from having these type of policies. But now that you know how whole life insurance builds money, ways that we can use it, the next question is how do you choose the right policy and avoid overpaying?
Absolutely, because whole life policies is just one type of cash building policy. There are others. And if this helped you see life insurance in a new way, hit that subscribe button. We post videos every week that help people like you and us protect their wealth, their family, and live out their purpose with confidence. So please drop a comment. Let us know, what would you use your cash value for?